Oh, Investor Beat starts now? Thanks for watching. I'm Chris Hill. Alert at the switch, as always, joined in studio by David Hanson. Thanks for being here.
How's that book?
Moneyball? Who doesn't love Moneyball?
It's a good book.
See the movie, too. The movie worked out okay.
Yeah.
Let's start with Amazon because they made it official. Amazon raised the price of the Prime membership from $79 a year to $99 a year. The stock did not take any kind of a hit. It was up a little bit. Why do you think that is? Do you think it was because, hey, look, we knew they were going to raise the price? Or is it because they put out this $20 to $40 range that they were going to raise the price and they came in at the low end?
Well, I don't know why it would take a hit. I think this is a good thing for the business. I mean, maybe not for the customer having to pay more, but for the business, this is a very good thing. An extra $20 or an extra $1.66 a month. So this isn't a huge deal for customers. And when you look at the competitive moat of Amazon, it's warranted. They can do this and people are still going to be Amazon Prime members. And we were talking before, some people were comparing this to the Netflix thing last year, or a couple years ago, when they tried to change their pricing strategy. The moat around Netflix is not the same as Amazon with all their distribution centers, the synergies they have with all their distribution. It's amazing. They can do this. It's warranted.
What is this going to mean long term? Obviously, Amazon keeps it very close to the vest. A lot of information. We don't know exactly how many Prime members there are. You see everything from about 15 million upwards of maybe the low 20 millions. What is this going to mean to the bottom line?
Not much, probably. I mean, it's going to be incremental, but it's incremental. And Jeff Bezos, you know, he squeezes everything he can get out of everything. So this is just more money coming to him quicker when people pay up for their subscriptions. It's over a year. So he's getting the money up front. He can deploy that into business. It's an incremental boost, but I wouldn't go out and buy Amazon just on this news. Okay,
let's get to a couple of companies reporting earnings. Fourth quarter profits for Williams-Sonoma came in higher than expected. They also increased their dividend a little bit. The stock really took off. Is that just because this is the rare, strong retailer out there?
Williams-Sonoma, a good retailer.
Yeah, how about that?
What is going on here? Yeah. But it's refreshing to see. We just talked about Amazon. Almost every other retailer, everybody says, well, Amazon's probably going to eat their lunch.
Every other bricks and mortar retailer
exactly.
is
it's nice to see that Williams-Sonoma is actually going online and being successful doing that. So they have many channels that they can sell through. They're being successful in doing that. So they're not just sitting back and saying, well, we were late on the online thing, like we've seen so many companies do, and they've just been trying to say, well, we're not going to do online, we're just going to be really good at bricks and mortars, and that's starting to fail. It's nice to see a company that's been successful.
You mentioned all the channels that they're successful moving through. They've also got the Pottery Barn brand, they've got West Elm, they've got high-end brands, and we've seen other retailers, apparel makers, etc., really succeed with going to the high end. How long can they keep this up?
I mean, I don't see any reason for it to slow down. Obviously, the last 5 years or so have been better for kind of the high-end customer than the low-end customer. When you look at the stock market reaching new heights, that's going to help household wealth for the wealthier families in the United States here. So it may slow down a little bit, but I don't see a reason why it would totally turn around.
The stock, Williams-Sonoma, hitting an all-time high today. You like it, or it's starting to get a little pricey?
I think it's probably fairly valued. I don't think this is a crazy overvaluation here, but it's not dirt cheap. Few stocks are dirt cheap in here, but this looks like a very quality business at a reasonable price today.
Okay, fourth quarter profits for Krispy Kreme donuts more than tripled. They got about 800 locations worldwide. How much bigger can this donut maker get?
They want to get a lot bigger. I mean, they're not just, they don't want to be this tiny donut shop on the corner anymore. They want to be all over the place, and most of their international stores are franchised, so they're not going out and doing everything international here. But I don't get too excited about the business of Krispy Kreme. Yes, you're kind of fighting.
The product, yes.
The product,
We're
yes.
very excited about the product.
Everyone gets excited about that, but you still are fighting some uphill battles here with kind of the health trend, going international in so many different spots. When I look at the management team, good management, but they don't have a lot of skin in the game, not a lot of insider ownership here. So, okay story, just doesn't get me too excited.
All right, that's going to do it for today's action. And give me a stock I can put on my watch list.
Watching Discover Financial Services, for no particular reason. They're not reporting earnings or anything, but this is a company that everyone kind of sees it as the poor man's American Express. Oh, they serve the lower end client there, but this is a company that has put up great returns over and over and over. Returns on equity, very impressive. And the price today, reasonable, so Discover.
I was just going to say, I mean, this is a stock that has beaten the market over the last year. It just hasn't performed as well as Visa and MasterCard.
Right.
Do you think that's maybe one of the reasons investors should put it on their watch list is, hey, look, this is, I don't want to call it a hidden gem, but it certainly is under the radar within its universe.
I'm glad you mentioned that. It does get lumped into the group with Visa and MasterCard, but I would say people should look at Discover more like a bank than a credit card company. They do have their own network like Visa and MasterCard, but this is a company that makes loans, most of them credit card loans, but also student loans and private loans as well. So look at this more as a bank, not a technology company.
All right, for David Hanson, I'm Chris Hill. Thanks for watching. We'll see you tomorrow.